Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and we're excited to have you join us today. We're starting off with a look at two interesting stories that caught our attention. First, let's talk about Realty Income, a giant in the real estate investment trust (REIT) space. With over 1,500 properties and a market cap that's more than 3 times larger than its next closest peer, Realty Income is a significant player in the industry. The company has a long history of annual dividend increases, spanning 3 decades, and currently offers a lofty 5.6% dividend yield. This makes it an attractive option for conservative income investors. However, the company's recent focus on fine-tuning its portfolio might not be as exciting for Wall Street. Realty Income has been disposing of properties and acquiring new ones, with a net decrease in its portfolio size over the first 6 months of 2025. While this might not be the kind of growth that investors are looking for, it's essential to understand that the company is working to improve the foundation that supports its attractive dividend yield. On the other hand, we have companies like A.O. Smith and O'Reilly Automotive, which are making headlines with their impressive financial performances. A.O. Smith, a leading manufacturer of water heaters and boilers, has seen significant growth in its sales and earnings. O'Reilly Automotive, a prominent auto parts retailer, has also reported strong quarterly results, driven by increased demand for its products. It's essential to consider the broader context and look at the stories behind the numbers. While Realty Income might not be making big moves, its focus on internal improvement is crucial for long-term success. Similarly, companies like A.O. Smith and O'Reilly Automotive are demonstrating their resilience and ability to adapt to changing market conditions. As we navigate the complex world of stocks and finance, it's crucial to stay informed and consider multiple perspectives. We'll continue to explore these stories and more in depth, providing you with the insights you need to make wise investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and politics where the lines are often blurred. Today, we're examining the impact of tariffs and trade policies on global markets. The story unfolding is complex, with multiple players and interests at stake. We've seen a surge in stock markets worldwide, driven largely by enthusiasm for artificial intelligence and the prospect of lower global interest rates. However, this optimism has been tempered by concerns over rising government borrowing and the sustainability of public finances. Bond yields have risen across major economies, reflecting investor worries about the cost of funding tax cuts and the potential for inflation. Meanwhile, the trade balance has become a key area of focus, with efforts to reduce deficits and protect domestic industries. Tariffs have driven up the cost of doing business and made planning more complicated, but they may also be eroding the trade deficit. The latest data shows the U.S. trade deficit hitting a 2-year low, with the deficit with China shrinking significantly. It's essential to consider multiple perspectives on this issue. On one hand, tariffs can provide a necessary correction to trade imbalances and protect vulnerable industries. On the other hand, they can also lead to unintended consequences, such as higher prices for consumers and reduced economic growth. As we navigate this complex landscape, it's crucial to stay informed and adapt to changing circumstances. The relationship between governments, businesses, and financial markets is intricate, and understanding these dynamics is vital for making informed decisions. Welcome back to the Riskwiser Zone. Today, we're diving into a fascinating story that raises important questions about the intersection of media, politics, and finance. It appears that CBS News has come under scrutiny for editing an interview with former President Donald Trump, specifically removing a portion where he discussed his administration's stance on cryptocurrency. According to reports, the transcript of the interview shows that Trump bragged about the U.S. being number one in crypto, and also mentioned that his predecessor, Joe Biden, had switched his stance on the issue. However, this section was not included in the video that aired on TV or online. The reasons behind this editing decision are unclear, but it sparked a heated debate about media bias and censorship. Now, some context is necessary here. Trump has been vocal about his dissatisfaction with the media, often accusing them of being biased against him. In fact, he recently claimed that CBS News paid him $16 million in a settlement over an edited video of Kamala Harris. While the details of this settlement are unclear, it's undeniable that Trump has been using his platform to exert pressure on media outlets. The implications of this story are far-reaching. On one hand, it highlights the importance of transparency and accountability in media. If news organizations are editing interviews to fit a particular narrative or agenda, it can erode trust with their audience. On the other hand, Trump's attacks on the media have been relentless, and some argue that he's trying to intimidate journalists into self-censorship. As investors, it's essential to consider the potential risks and consequences of this situation. A free press is a cornerstone of democracy, and any attempts to undermine it can have significant repercussions for the market and the economy. Moreover, the rise of cryptocurrency has already shown us that regulatory uncertainty can lead to market volatility. In conclusion, the story surrounding CBS News and Trump's interview serves as a reminder that the relationship between media, politics, and finance is complex and multifaceted. As we navigate this ever-changing landscape, it's crucial to stay informed, critically evaluate information, and be aware of potential biases. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.